let's start talking about WeWork. They needed this financing package in order to help its transition to more SoftBank control. What's the latest here?
The way I see it, this is SoftBank's first real hurdle clear in their effort to salvage their big investment bet. This gives the company some time to get its act together. Remember, we're just a few months removed from one of the greatest startup stories turned on its head. The IPO collapsed, and then SoftBank had to jump in with this big bailout package that gives them control of the company. The financing obviously gives them greater runway, gives them more time to sort of get back on the path to stability. But at the same time, it also opens up a boatload of cash that was tied up with their earlier credit line. So this is something, at least from a credit perspective, that becomes a little more appealing to investors. Still a long way to go, but a good start.
Well, hold on a second. Let's talk about what this financing package actually is. It's Goldman Sachs, right? And is it a loan that's going to stay on Goldman Sachs' books, or that they're arranging to syndicate out? How big is it?
So it's a $1.75 billion financing. Goldman committed to it last week. Goldman would not have done that unless it was confident that it could farm out pieces of that loan to other lenders. So how did they do it? How did creditors suddenly become comfortable with WeWork? Well, they added a simple twist. They made SoftBank one of the technical borrowers on this line of credit. So effectively, lenders will be taking the SoftBank credit risk way better than the WeWork credit risk. And that's why people have been able to get comfortable with it. That's why Goldman was willing to underwrite it. And that's why WeWork now has a sufficient amount of capital to play with.
Which is really interesting because SoftBank is taking the risk on its books in a very real way, raising some questions about how much the Vision Fund is getting conflated with the overall business of SoftBank, which is varied and financial and perhaps a little bit less speculative than some of its startups. I'm wondering, what do we know? There was a feature in Business Week really talking about the culture within SoftBank. Can you give us a sense of what that's like and how that's informing some of these decisions?
First off, fabulous story. If you haven't read the story, you have to go to the nearest newsstand, pick up that Business Week piece. It's the cover story. We have fabulous reporters on it. And it really paints a picture of chaos, confusion, and more importantly, recklessness, right? And if you just look at the WeWork story itself, just a few months ago, Adam Neumann was marketing this as this grand tech play that will control the world. A few months later, we're just talking about a real estate company that is hoping to work off that real estate arbitrage to make sure that there is a feasible business here. And that goes to the broader SoftBank idea of whether was it really smart to go and tell all these startup founders, all these startup investors that you have to go big, grow at all costs, forget about profitability. The conversation has shifted to figuring out whether profitability is what they need to focus on, at least first off.